What's up guys, it's Nathan here. Today we're discussing a very relevant topic for home buyers across Australia, and that's a growing reliance on the bank of mum and dad. A recent study conducted by the University of Sydney showed that almost half of young home buyers now turn to their parents or family members for help with their home deposit. So let's dive into the details and see what this means for the property market and young home buyers in Australia. Dr. Lawrence Troy, a senior lecturer at the University of Sydney, conducted a survey tracking the savings of 25 to 34-year-olds for their first home in both Sydney and Perth during the peak of soaring house prices. The research team closely monitored 20 households across 2 cities and spoke to them every fortnight for 10 months to understand how they managed to save for a home deposit. The results were quite interesting. The study found that the usual savings and budgeting strategies, such as cutting back on discretionary spending, simply weren't enough to save a home deposit and keep up to pace with the rapidly increasing property prices. About 40% of the first home buyers reported that they needed to seek help from parents or family members to get into the property market. The main challenge for these young home buyers was the cost of the deposit, which had significantly increased due to skyrocketing prices during the pandemic. And if you find value in these videos, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. It inspires us to create more content we hope you enjoy. Another interesting aspect of the study was the impact of income fluctuations on the ability to save a deposit. Many surveyed participants reported income fluctuations every fortnight, whether it was due to being self-employed or particular industries that they worked in. This inconsistent income made it extremely difficult for young home buyers to plan and to save a deposit, as they often had to dip into their savings to cover living expenses. The situation in Perth was quite different from that it was in Sydney. In Perth, first homeowners could make a trade-off regarding the size or location of their future homes, which had significant impacts on the deposit required. As a result, home ownership for people in Perth was around 70% compared to that in Sydney, which was only 61%. In Sydney, choosing a cheaper suburb didn't change much of the difference in the deposit costs required, and often came with trade-offs of being far away from work or social networks. The research wrapped up near the end of 2021 when interest rate rises started to soar. Since then, the challenges for young first homeowners have been compounded by the interest rate environment and the cost of living, making the goalposts for home ownership consistently moving. Access to family support has become the single biggest factor enabling young Australians to enter the property market. The Australian Housing and Urban Research Institute found that 40% of 25 to 34-year-olds expected to rely on bank of mum and dad to achieve home ownership. This comes as a result of rapidly rising house prices and cost of living pressures, which has limited the chances for young Australians to buy a house, even those with moderate incomes. And let us know in the comments below, what are your thoughts on the increasing dependence on the bank of mum and dad? We'd love to know what your thoughts are. The study revealed that one of the most important saving strategies for young home buyers was living with their parents or in a property owned by their parents. Dr. Troy mentioned that if only those with supportive families can save for a house, it potentially locks those without the support from getting into the market altogether. The survey also stated that unstable and low incomes were also a major hurdle to saving a deposit, with 70% of those surveyed holding multiple jobs for at least the last 5 years, and 40% were seeking more hours. This income instability makes it even harder for young Australians to save a deposit. Interestingly, most of the survey participants did not see government support as a crucial step to help them achieving home ownership. This indicates that current policies like stamp duty exemptions have had little to address the structural issues affecting the availability and affordability of housing in the market. Dr. Troy suggests that government policies should focus on removing long-term risks and uncertainties generated through rising asset prices, interest rates, and precocious labor markets, rather than providing short-term housing deposit subsidies. Joey Maloney, a senior associate at the Grattan Institute, pointed out that there are fundamental issue with the housing market is that the supply is not keeping up with the demand. Maloney said that there are too many constraints on newly constructed homes and that local councils prioritize the preference of existing residents over the needs of potential future residents. He suggested a more evenly spread median density in inner and middle ring suburbs as a potential solution to help the housing problem. And remember to share, like, and subscribe to stay informed with all things property and finance. Interestingly, over half of bank mum and dad borrowers experience financial stress compared to 28% of borrowers who rely on their own resources. Many young borrowers borrowed at maximum amounts during record low interest rates and now face difficulty meeting their increased repayment costs, which also puts their parents' financial welfare at risk. Parents who contribute to their children's property purchase face pressure as their asset base and cash flows have reduced, limiting their ability to provide additional help. The Bank of Mum and Dad was estimated to be among the top 10 sources of residential property deposits in Australia, with loans believed to total around $35 billion. Meanwhile, borrowers are increasingly concerned about meeting their mortgage repayments and have started cutting back on expenses such as food and clothing. The study highlights the growing reliance on the Bank of Mum and Dad for young home buyers across Australia, as traditional saving strategies no longer suffice in the face of skyrocketing prices and fluctuating incomes. It's clear that more support is needed for young Australians looking to break into the housing market. Policymakers, the property industry, and communities need to address these challenges to ensure there's more equitable and accessible housing for all. Thanks for joining us today. And did you know, here at Hunter Galloway, we're mortgage brokers that deal with people Australia-wide. So if you need assistance with buying your first home or even investing or refinancing, get in touch. There's no cost for our service, and you can reach out with us at huntergalloway.com.au, fill in the contact form, or call us directly on 1300 088 065, and we'll see you next time.